We're jumping straight into RedCat Holdings today. Everyone is watching the price action, but the real story is the shift to mass production and the regulatory moat being built around U.S. drones.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And what a move it's been. I mean, you look at the chart for early 2026, and the stock has just ripped higher.
Absolutely.
Nearly erased all those losses from 2025. You see these massive volume spikes, the price popping 10, 13% on just snippets of news. It feels like a frenzy. But I have to play the skeptic here, right off the bat. Is this just a hype train? Is it just driven by rumors, or are we actually seeing the birth of the next big defense contractor?
That's the question.
Because when you look past the daily moves, the volatility, it feels violent.
It does, but I'd argue it's a necessary violence. The market is trying to reprice a company that is fundamentally changing its whole identity. We aren't looking at some speculative R&D lab anymore. This is a manufacturing company, a real one, in a sector that has, suddenly become a top priority for basically all Western governments.
That is the key right there.
Yeah.
So before we get lost in the weeds, if you want to understand the difference between noise and signal in this sector, make sure you subscribe and hit the like button. Our whole goal here is to simplify this complex data so you can see the board clearly.
So let's start with the bull case. Why is everyone suddenly piling into this name?
2 words: revenue explosion. And I don't use that word lightly. We are talking about a true hockey stick chart that you rarely see outside of maybe some early stage software company.
Right. But this isn't software, is it?
No, and that's a crucial distinction. In software, you can scale almost infinitely. The marginal cost is 0.
But in hardware, scaling is painful. It's expensive.
Exactly.
But just look at their third quarter numbers. I mean, revenue up roughly 646% year over year.
646%.
They brought in over $9 million. That is a massive, massive jump from where they were.
Okay, hold on. I have to push back on that a little. That percentage, it sounds incredible, but if you sell, $10 last year and $100 this year, that's huge growth, but
Yeah.
It's still meaningless. Was the comparison base just effectively 0?
It wasn't 0, but it was a totally different kind of business. And that's the insight people are missing. They were in an R&D phase.
Okay.
Making a few units, testing them with special forces, maybe selling $1 million worth of product here and there. Now they're moving to mass production. They are scaling up to fill huge real orders.
So the hockey stick is real because the factory is finally humming.
It's humming. And if you think Q3 was big, you have to look at the guidance they put out for Q4 of fiscal 25. That's where the numbers get truly eye-popping.
Oh, it's staggering. They're projecting an increase of around, 1,800%?
1,800, they're talking about hitting the $24 to $26 million range.
In a single quarter.
In one quarter. It's a jump that's hard to wrap your head around for a company that makes physical things.
Right.
And we need to unpack the why. It's not just that people suddenly like their drones more. It's not a marketing thing. The company is changing its state of being.
From a boutique shop.
To a factory floor. Exactly. They're proving they can pump out units at speed.
Which brings us to the second part of the bull case, the moat. And we hear about moats all the time, right? Brand loyalty, network effects. Yeah. But here, the moat is, it's legal. It's regulatory.
It's the blue list.
The blue list. I love that name. It's the Pentagon's VIP club. The official name is the Blue UAS list. If you want to sell a drone to the U.S. military, you pretty much have to be on it. Is that just a suggestion, or is it a hard and fast rule?
It's becoming a hard rule. I mean, just think about the geopolitical situation right now. In January 2026, the government has realized that relying on your adversaries for critical surveillance tech is
A huge security risk.
a massive security risk. You can't have a drone that phones home to a server in a country that might be hostile. You just can't.
And this is where the FCC comes in with the heavy artillery.
Yes.
Section 1709.
That's it.
Effectively, Chinese competitors, the big ones that used to dominate the market, DJI, Martel, they're being banned, or at least severely restricted.
And that creates what I call a forced market dynamic. Imagine you're a police chief in Ohio or a border patrol agent. You've got a budget. You need drones.
Sure.
You used to buy DJI. They were cheap. They were good. Now, you legally cannot use federal funds to buy them.
So the government has just cleared the entire playing field. They kicked the 800-pound gorilla out of the stadium.
That's a great way to put it. You have to buy American, or at least Blue List approved. And who's sitting there ready to go?
RedCat. With the Black Widow drone.
With the Black Widow.
It sounds like a superhero. Let's talk about the tech for a second. Is this thing actually good, or is it just the only option left on the shelf?
It's the workhorse. This is their drone that was selected for the U.S. Army's Short-Range Reconnaissance Program, the SRR.
Which is a huge deal.
It's a huge deal. It's small, you can carry it in a rucksack, and it's designed for the soldier on the ground who needs eyes in the sky right now. It's not a prototype. It's becoming standard issue gear.
And that gets them into the Department of Defense's $1 billion drone dominance program. Now, I see retail investors getting really excited about that $1 billion number. Does that mean RCAT just gets a check for $1 billion?
No, and we have to be super clear about this. It's what's called an IDIQ contract.
Okay, simplify that for me.
Indefinite delivery, indefinite quantity. Think of it like a cafeteria. The DoD set aside $1 billion to buy lunch.
Okay.
Being on the IDIQ contract means RCAT is allowed to stand behind the counter and sell their sandwiches. They still have to win each individual order, but if you're not on the contract, you're not even allowed in the building.
So it's a license to compete for a slice of a massive pie.
Precisely. But without that license, you're totally irrelevant. And being on that list, it's a massive validator for every other potential customer.
Mm-hmm. And the smart money seems to agree. We're seeing institutional ownership start to tick up. Vanguard, for instance, has been increasing their stake.
Well, it's a big signal. Vanguard doesn't typically bet on, penny stock rumors. When funds like that start accumulating, they see a long-term story, not just a quick pump.
And we're seeing it in the options market, too.
Yeah.
The volume of call options.
Well, yeah.
People betting the stock price will go up.
Yeah.
It is well above average. Traders are positioning for this to continue.
So on the bull side, you have explosive growth, a government-mandated moat, and institutional backing. It sounds pretty good.
It sounds like a slam dunk.
Yeah.
If I stopped the show right now, everyone would run out and buy it. But
Ew.
if it were that simple, the stock would already be at $100.
Well, exactly. And this is where we need to earn our keep. We have to look at how this all might go wrong.
Let's do it.
Let's break that down even further and look at the cost of all this growth, because growth is never free.
It's incredibly expensive.
Yeah.
We talked about revenue, the top line, but we didn't talk about profit. And that's where the bear case really starts to show its teeth.
Right. They're growing revenue, yes, but they are currently a cash incinerator.
It's an incinerator.
If you look at the trailing net loss, we're looking at something around $90 million. In the first 9 months of fiscal 25 alone, they lost over $50 million.
$50 million just gone. And the margins, I saw a figure that made me do a double take.
They're deeply negative. We're seeing operating margins around negative 182%.
Okay, let's put that in plain English. For every $1 of drones they sell, they're spending almost $3 to keep the lights on.
Roughly, yes. Now, a bull would say, of course they're losing money. They're building factories. And that's true.
Right.
They're spending aggressively to build inventory before they get paid by the Army. It's the classic manufacturing J-curve. You have to buy the metal today to sell the drone in 6 months.
But for a shareholder, that's a dangerous spot to be in. They have to pay for that somehow. They have cash. I think the last number was around $212 million.
They do, which gives them a runway. But here's the danger. If they burn through it too fast, or if the government contracts get delayed.
And we know the government loves to delay things.
How do they get more money? They can't just walk into a bank with negative 182% margins and easily get a loan.
So they sell more stock.
They sell more stock.
Dilution.
Yeah.
The silent killer for retail investors.
That's it. Dilution. Every time they raise money by selling shares, your slice of the pie gets thinner. If you own 1% of the company and they issue millions of new shares, suddenly you own 0.5%.
So you could be right about the company.
But wrong about the stock. That is the classic trap of high-growth hardware.
And it's not just the money, it's the execution itself.
Mm.
Scaling hardware is. It's just hard.
So hard.
Software, you just copy-paste. Hardware, you have supply chains, defects, logistics.
We even saw a glimpse of this recently. There were reports of delivery delays. 6-7 weeks backed up. The market got spooked.
Yeah.
When you're priced for hockey stick growth, any little hiccup in getting product out the door is punished severely.
We call that indigestion. Can they actually build everything they sold on time? The Army isn't the most patient customer. If you tell a general his gear is arriving Tuesday,
It better arrive on Tuesday. And if it doesn't, that reputation damage can be fatal. This is the core execution risk. They have the orders, they have the money, But can they physically assemble the units fast enough without quality control just falling off a cliff?
And that leads right into the volatility. People
Yeah.
need to understand this is not some stable blue chip stock. In 2025, this thing dropped 40%
40%.
before it ripped back up. It's a roller coaster.
And it reacts to everything. I remember the price jumped on some unconfirmed rumors about Venezuela, just social media speculation, but the stock moved like it was fact.
That's the danger. When a stock is this hot, it attracts momentum traders who just buy the green line. They react to headlines first, ask questions later. You have to have a stomach of steel for this one.
You really do. You can't panic when it drops 10% on a Tuesday for no good reason.
Okay, so we have the bull case, massive growth, regulatory moat. We have the bear case, cash burn, execution risk, dilution. If I'm watching this right now, what are the triggers? What happens in the next 30 days that actually matters?
Okay, 3 main things on the calendar. First and most immediate is earnings.
That's coming up mid-February, right? Around the 13th.
That's what we're expecting. Now, here is the play. Do not look at earnings per share. Ignore the EPS.
Why? That's the first number everyone looks at.
Because they're going to lose money. We know that. The EPS will be negative. If you see that and panic, you're missing the whole point. The market expects a loss.
So what should we be looking at?
2 things. The backlog and the Q4 revenue confirmation.
Did they actually hit that 1,800% growth number?
That's it. If they come in at $25 million in revenue, the thesis holds. The factory is working. If they come in at, say, $18 million and blame supply chains, we look up below.
That would shatter confidence.
Completely. And the backlog. That's your crystal ball. Revenue is yesterday. Backlog is tomorrow. You need to see that number growing. It proves demand is sustainable.
Got it. Ignore EPS, focus on top-line revenue and the order book. What's trigger number 2?
Innovation Day. They're hosting an event in West Palm Beach on February 27th.
Sounds like a big product reveal.
In a way, it's their chance to show off the product roadmap. Specifically, I'd watch for updates on something called Blue Ops.
Blue Ops.
It's their maritime division, drones that operate on the water.
Oh, that's a whole new market. Not just looking down from the sky, but looking around on the water. For the Navy, Coast Guard.
It's huge.
Yeah.
And if they can show their ecosystem isn't just flying drones, but also swimming drones, that expands their addressable market significantly. But be careful. These events can be classic buy the rumors, sell the news situations. The stock runs up in anticipation, and if the news is just okay, it deflates.
Right, expectations are high. And the third trigger.
Macro and regulatory. This is the wild card. Just keep an eye on the FCC covered list.
The banned tech list.
Yep. If we see any new additions, more foreign components get banned, more specific bans on Chinese tech, RCAT's moat just gets wider and deeper. Every time a competitor gets banned, RCAT's phone rings.
It's fascinating. So much of their success is tied to government policy, not just building a better mousetrap.
That's the defense sector. You live and die by the budget and the regulations, and RCAT has positioned itself to be the basket where all that made in America demand falls into.
So wrapping this up, what does this all mean for someone looking at that chart right now?
It means you're making a trade-off, a very clear one. You are buying a company with triple-digit growth potential and explicit government backing, which is rare. But you are paying for it with massive volatility and the fact that they're burning cash to fuel that growth.
Here's the final thought to chew on. We're seeing a world where Made in America isn't just a slogan, it's a legal requirement for defense. If RCAT is the only game in town that can scale, does the cash burn even matter, or is the government effectively underwriting their success?
That is the billion-dollar question. If they're deemed critical infrastructure, they might just be too important to fail.
That's the lowdown for today. We'll be watching those February dates very closely. Don't forget to subscribe so you don't miss the update when those earnings drop. We'll see you next time.